Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at gold and whether it can continue to shine in 2025. Gold had a stellar 2024, rising more than 25% to post its biggest yearly gain in 14 years. Federal Reserve rate cuts, sustained geopolitical risks, and a raft of purchases from global central banks powered its performance, making gold one of the best performing assets of 2024. Gold's gains over last year outstripped other commodities as iron ore and lithium tumbled throughout the year. So, can the gains continue in 2025? Well, uncertainty over the Fed's direction, potential trade wars sparked by a second Trump presidency, and China's efforts to stimulate growth could all see the precious metal continue to shine. Tim Waterer from KCM Trade thinks a lot of things are working in gold's favour.
Could come close. It's a tall order. From here, if gold's to replicate its gains from last year, it would need to move to around that $3,300 level to basically repeat the performance of last year. It could do it. It might come close. We're sort of looking maybe around 3,000, 3,100 as a viable target for gold this year. The risk to that scenario is if the Federal Reserve, as a result of pro-growth, potentially pro-inflationary policies, if they have to reverse course and move from a scenario of rate cuts to at this stage to either a pause or even an outside scenario, but a case where they raise rates later this year, that could be an obstacle for the gold price. But overall, still looking like a fairly bullish outlook for gold.
Asia makes up more than 60% of gold demand, with China and India the world's largest gold consumers. In 2024, Chinese demand for gold jewellery weakened to its lowest level since 2010, according to the World Gold Council. Meanwhile, reported purchases from the People's Bank of China also slowed notably, with China's total gold demand down 19% year on year. The World Gold Council projects a narrower decline of around 3% in Chinese gold consumption across 2025 as authorities step on the gas to achieve growth targets, with further PBOC cuts likely. Demand from India is expected to remain strong, particularly as the country's economic growth remains above 6.5%. The risk of trade wars under a second Trump presidency is likely to see gold maintain its position as an effective hedge in 2025.
Gold should be considered a nice diversifier within an investor's portfolio, giving you protection against, inflation and any geopolitical risks that we might see. And we saw a lot of that in 2024. Inflation might rise again under a second Trump administration. So again, we're quite bullish on the gold picture heading into 2025.
The gold price is rising despite a quite strong US dollar. Now, obviously, the Trump administration is going to make a lot of changes come the 20th of January. Exactly what that will be, not quite sure. But the net effect of it, I think, is going to be continuing demand for gold. And we should see record gold prices this year in 2025 and for the next few years.
Well, ausbiz recently asked guests what their 2025 stock picks are, and out of the 12 stocks of Christmas, 2 are ASX-listed gold miners. Henry Jennings from Marcus Today likes Newmont, the world's largest gold miner, which is dual-listed on both the US and Australian markets. Macquarie recently upgraded Newmont to outperform with a near 41% upside in its target price of $86 per share. Analysts say a softening in the outlook for the Aussie dollar has increased their estimate on the stock. Meanwhile, Jonathan Takadina from MPC Markets favours gold and silver miner Andean Silver Limited, saying expect good news and consistent news flow throughout the year. He says they also have a maiden resource estimate due in the first quarter, and that means they have all the ingredients, he says, to keep growing their resources. Now, the stock is not widely covered, but there are 2 buy recommendations according to Refinitiv data, with a current target price of $2.88, suggesting the stock could gain almost 240% from current levels. Shares rose 200% in 2024 after tracking virtually sideways in 2023. And finally, looking at Evolution Mining, which rose almost 22% last year, Analysts neutral on the stock with an average hold recommendation and an average price target of $4.76, suggesting a 2.7% drop from current levels. Morgan Stanley believes many resource stocks are skewed to the upside from a risk-reward basis as the market awaits more clarity on US tariffs and China stimulus. The broker prefers Evolution Mining for the copper exposure and high free cash flow generation. And that is your IG Macro Intelligence for this week. We'll see you next week.